Good morning, traders, and welcome to the live trading webinar today with Scott Pulcini, futures trader. He will be trading live, and it is in demo paper trading mode, and we'll go through the descriptions here live trading so that you understand what exactly it is. This is the completion of our educational process here, that we have an educational course that is free. It's for you to learn how to read and integrate order flow within your trading, which we think provides an edge. We have live advanced webinars that go through the daily market activity in the live market to understand how to apply what you've learned from the course. And then we have live trading from various traders like Jay Trader and Scott Pulcini. You guys know who Scott is. He's been trading for over 20 years and was responsible for trading about 10% of the S&P E-mini volume back at 2002 to 2005. So we're very lucky to have him here. He does offer mentorship. We have his contact information here. I'll put this into the chat so you can reach out to him. Let's go through the disclosures and then turn it over to Scott. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo paper trading mode, and strictly for educational purposes. Live trading cannot, executed in simulation cannot accurately represent realistic trading performance. The risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, let's turn it over to Scott. Scott, are you ready to go?
You hear me, Bruce?
Yes.
How's it going?
All right, how are you?
Good.
So I don't see your screen yet. There we go. Okay. Got it.
You're on the ES screen here?
Yeah, got it. Yep, all set to go.
Okay. All right, so just finally had something fire off here. I took a trade aggressively in NASDAQ earlier. Lost on that one. I'll go over that here in a second, but this is a new setup, so I'm going to draw this. Yeah, I thought this was threshold. Yeah, 509, 509 stops. You can see the sweeps here as well. So the one thing you need to know when you're drawing these stop runs, and I forgot when we had the meeting with the developers first, I forgot exactly why they said they did this is by design. Yeah, where's my
NQ December stocks stopped by NQ.
What's that, Scott?
174 contracts.
1 second, I'm trying to find where my drawer is. Oh, here it is. How it starts to draw the stop before the actual spike on the sub chart. It's on the on chart, so it seems to always, it does always start before.
Yeah,
most times.
Yeah. It's basically an aggregate there, kind of on the sub chart. I mean, it kind of waits, but before it kind of reports it. That's why there's a bit of a delay.
Okay.
And believe me, like, if we did it like all, sorts of details in there, it would use more memory.
Got it. Well, why doesn't it do that for the icebergs though?
I don't know.
Okay. It's not a big deal. I just know the stops. The point is, all you need to know is stops usually start before the spikes. So just to get your zones accurate, if you put the on chart on, and you want to have it less than threshold, just so you're able to see. You go to on chart.
ES December stocks stopped by ES 503 contracts.
So just through that zone, it doesn't matter now. So get less than threshold, just so you can see, more. you can see the line a lot more often, and it'll just help you draw your zones. Because I don't draw my zones off the on chart, I draw it off the sub chart, but this just helps you see this red line and help you draw your zone better. We'll show off some more examples, probably like right now. Let's see. If these markets were looking over the edge of the abyss, and they have held, which is, we'll talk about that bigger picture stuff, but many times when markets look like, or when they should do something based on, you know, structure, and they don't, the subsequent move the other way is huge. So this is looking like one of those times. So, I thought this was going to happen yesterday, and it didn't. It kind of just bounced around. Actually, this was a big stop run, and I didn't draw this properly. So it's down here. That's not enough either. There it is. Yeah, it started all the way down here. I know this wasn't threshold. My threshold for stops is 500, but it's close enough, and then it spiked up to 800 here. Just trying to find the exact price that this started coming in. And you're not going to see the red line because this was under 4. So we'll just draw right here. That's close enough. All right. All right. So what you see there, the best way to do that is to pull away the bubbles on the slider to help you draw it, and use that last price line. I've been starting to do that. Again, I didn't realize for about 3 years that, because I turned this off right when I got Bookmap, and then I realized, someone pointed out in my room, that if you hit right click here, configure visible components, last price, that shows you the actually last traded price line. I was drawing my zones off the bubbles, which was not accurate. So like I said, I wonder how much that's cost me over the last 3 years, but we have now adapted, and that is your zone. So bigger picture stuff. So this is what I was talking about. This market one. Actually, let's see this here. Failed breakout. Should have done that. Did not. When you see failed breakouts, this move should have been like that. It didn't. It held this zone, held this prior balance area, put in this tail yesterday. I told my
December stock by ES 510 contract.
I told my trading room, if it breaks this, there's nothing here structure wise, and it's going to be a disaster. And then it held, and now it's doing this. This market should do one of these, and it is in line with spot gamma. We'll read that here in a little bit too. They're calling for, based on the options complex, calling for a rally into OPEX on Friday or tomorrow. So this could be a rally back up to here, this zone here, which is important. This was directional conviction from here. I actually deleted this zone for this gap down because we traded through it, but you can see this is where this started. We opened up right over here the other day, and this thing got smushed. So it looks like we're going to give this a shot again. So this is all the way up at 37.75. So that's what I'm expecting based on. So every day, every morning, I come up with a thesis of what I think should happen based on this charting. Right? I'm a day trader. The real-time volume setups, the SI indicator setups dictate whatever I do. But when my thesis aligns with the real-time volume, then it's like it's go time, right? And you can trade bigger, so on and so forth. So like I said, this should have done that. It's now doing that. So I'm expecting a subsequent bigger move than what should have happened there, because it didn't happen. Right? So that's how I see it. Again, thesis isn't always right. It's probably 50-50, but when I get these volume setups in line with my thesis, then I'm extra confident, right? And you can trade more size. Granted, you don't want to be risking, more than your daily. We talk about this every single week. You should have a daily loss limit. These guys entering the room, it's driving me nuts. I mute it every week, and it comes back every single time.
Yes, December stock by ES 717 contracts.
Right, this just stopped running.
Stock by DC 222 contracts.
So you got to draw this one. So you don't usually see setup after setup after setup like this, but it is what it is. So I'll draw this one. You can see this is another A lot of puking here. A lot of guys looked at that chart and thought we were dying like I thought was going to happen and loaded up short, and now they're all puking out their positions. But there is something to note here. You know, this market's moving up. It's not buy ice, right? It's not like big money is trying to hold us up. These are all stop runs. So it doesn't really matter right now as far as, you know, what's going on. The market's moving up. But, you know, if this thing gets to an exhaustion point, you can tell yourself, you know, we get up to these areas up here. Again, this is a little down the line, maybe later today or tomorrow. You get up to these areas up here in this prior balance, and you say to yourself, well, I remember that webinar yesterday. This is all stop runs, all this buying. That's not real buying. That's just guys puking. Yeah, it still propels the market. But is that able to sustain when we get to important areas? And I'm going to say no. So right now, I'm not going to fight it. But when we get up there, up to those areas like 37.75, 3,800, unless something changes here, I know all this buying to move it up there is just stop runs, right? That's important information when you're coming up with your bigger picture view. All right, let's see where we're at. This is my process. So I draw my zone. This is the latest setup, and I always revert to the latest setup. See 717 buy stops. And then I take a look. This is my connection. The other thing I use in my day trading are Ludwig levels. They're extremely powerful support and resistance. You can see where we're at right now. So, as you watch my prior webinar, this is actually a very important area even for right now. So you have red lug, which is very strong resistance. You have extreme standard deviation of VWAP. You also have the top of a 2-day market profile composite all in one, right? So when you get, they call that confluence. This, you got 3 different things going for a short here. You know, if this fails, so I will short this aggressively out of this zone. Let me hurry up and get this set up. So the next step is ATR is 8.68. So then I go to my new handy dandy spreadsheet. I'm hoping I don't miss this trade. This isn't part of my trade room now. It's incredible. Jay Labrada, my trade room, made this for us. We're doing a shorter term trade. This ATR trade up here. That's more like a scalping type of trade, even though I don't like to use the word scalping anymore. But it's way more engaging, where it's not position trading on these webinars. And I have 2 different trades. I have the position trading and I have the scalping or the reversion trade. So for these webinars, we are doing the position trading. If you want to see the ATR trade, come over to my room. All right, so we put in the ATR. The bottom of this zone was 36.75. So I'm going to put that in here. 30. What I said was 37, 36.75. Top of the zone. Another good thing about that spreadsheet that I didn't even realize, I'll tell you here in a second, 37, 38.75. So we got the ATR, top of the zone, bottom of the zone. Now we go down to the position strategy. I can short aggressively at 27.20. Obviously, it's not 27.20, so we'll go 27.25. I could put on 3. This is my risk. I risk 2% of my account size on trade. So it doesn't matter how many points you're risking. It matters you adjust based on the volatility, adjust your size, right? And we'll go over this too. I'll go on a little rant here on an email I got the other day, which people just don't get it for some reason. This is why traders fail. One of the main reasons. We'll go over that. So I should be in at 29. It didn't quite get there. I will put this in. And it's actually going to be right below this prior zone too. So I like that. So 27.29 quarter is where I'll enter, and I can put on, based on my risk, I can put on a 3 lot. You could round up and put on 4, but I'm just going to put on 3. It's 3.22, and I'm not trading micros, obviously. So 29 quarter, I will short that aggressively. So I have 2 ways of entering these trades, aggressively and conservatively. Conservative trade is I wait for a full ATR. I wait for a retest. This was a full ATR, by the way, because my entry is 110% of an ATR. So I'm just outside an ATR. But you can see how these algos stopped and snapped this back right at an ATR. It's part of our reversion trade that we're doing in my room. So hopefully some of my trade members got that one. So the conservative entry is this. My aggressive entry is just getting in right when it breaks 110% of an ATR outside of the most recent volume setup. So I actually got that anyway. So this is a I'd be in this trade regardless, is what I'm saying. I was going to be aggressive based on the confluence we just talked about, the red lug, the market profile, extreme standard deviation of VWAP. The other thing you want to look and see what the relative volume looks like, because if it's huge, you don't want to be. I wouldn't have been aggressive on my short. I still would have shorted it on our ATR retest failure, but you can see here it's really nothing. It's normal. It's not like crazy. When you start getting volume like this, where you get 200, 300, 400% of normal, that's why I love this type of chart. It's showing you the exact time period of the day for the last 30 days. So I know for the last 30 days, this is just normal volume. So I'm not afraid the big money's coming in here to run me over if I was going to be aggressive about this setup. Yeah, I'm going to change this color too so I don't get confused. All right, so that is that. Hold on one second here. So now I'm just waiting. So the other thing is I would not go along this setup for two reasons. One, first and foremost, we're right at the red lug. I wait for it to bust through the lugs, or the red lug, build new lugs, because I know how powerful those Ludwig levels are, right? As far as I don't mess with the red lug unless I see a market moving up to the red lug. Might as well just show you the lug. And I see extreme relative volume. Then I'll give it a shot if I get a setup that warrants, right? This relative volume, is not. I just showed you the relative volume. It's normal, so I wouldn't go long here anyway, right? But I forgot what I was saying now. I was so even if I was going to go long, this setup has been disqualified as a long because we've got a full ATR below here. So from my experience of watching thousands of these setups over the last 3+ years, I've determined that if the market is able to get a full outside or at least a full ATR away from the setup, then it's not valid going the other way, right? If this is truly bullish right now, you get this stop run, right? And then the big money holds it up here. It's one of my 6 setups of my course, and what I trade off of is called a stop and hold, right? So if this was truly bullish right now, the stop run would have fired off like it did, and then the big money would have come here and hold it.
December stop by ES 500 for contract.
So I'm not saying it can't go up, but I'm saying from my experience, if it's able to push an ATR away from there, I don't want part of the long, and then I cancel. Now what just happened, we had a new setup, so now I have to cancel this order, and I draw a new zone based on the new setup. Like I said, this doesn't usually happen all the time.
December stop by
You can see this.
880
These are just
contract.
major pukes is all this is.
Stop by GC 187 contracts.
But you see, like, I didn't just jump in a short there, right? There was a lot of reasons to short there, but I let the real...
December stop by ES
Wow.
734 contracts.
Talk about a puke fest.
December iceberg sell and Q 163 contracts.
There's a lot of reasons to short there, and this is the beauty of the most important thing in trading, the real-time volume. I waited, and I needed to see a certain thing to short it based on the real-time volume and my setups, and I didn't get it, and I just avoided getting run over on this move, right? How good did that short look? People playing market profile, even the bigger picture. This was back to the high volume node of this balance area, and there was a lot of reasons to give that short a chance, right? And it just ripped right through there, and I just avoided a loss. Why? Because I rely on the real-time volume, which is the driver of markets, not price, volume. And I saw something on Twitter the other day. Some guy was saying, "Oh, price action is king. It rules." Well, yeah, price action is important. But why is it king? It's king because of the volume coming through, not because price doesn't move price. Volume moves price, right? So that's what you need to realize. If you're already a successful trader, you're not using real-time volume. You just don't have all the information, right? And you could be even better.
Yeah. Scott, to further that explanation, just to get into the order flow definition here, therefore, if it's volume, if it's price action, then it's volume, and if it's volume, that means the orders, transaction of orders, so order flow. This is why we can get an edge in order flow.
Absolutely. It's the edge, right? So that's all I ever talk about because it is. And I mean,
Yeah, yeah. I just need to make that kind of connection because a lot of people are unfamiliar what order flow means.
It's just orders coming in the order book. They're either, these are resting orders, but you have market orders coming in the order book. You have hidden orders. Those are the icebergs, right? That's the big money that hides their orders, because this 80 to 90% of the trade are algorithms, right? So big money can't come in and put a 2,000 lot in the order book to get filled, because the algos pick it up and run it away from them and try to make them chase their price. So it's just a big game that goes on, a cat and mouse game all day long. So that's why there's icebergs. We haven't seen one, by the way, and we've seen nothing but stop runs. So just remember that as we move higher and higher and higher, when we get to an important inflection area, like I just got to talking about, that's important information to know. You say, hey, I'm not afraid here. This entire move up was not real buying. It was just guys puking, right? So let's go through this process again. 46 quarter is the top of the zone. 43 quarter is the bottom of the zone. The other thing I was saying was awesome about this spreadsheet is, in my room, when I put in these zones, because a lot of people struggle when they first start Bookmap or get Bookmap and drawing the zones, they don't know if they're right. Well, you get the master sheet of this and you can see exactly where I'm drawing my zones. I actually just formed it up today. Because when you get in here, you want to make a copy. When you get in my room, you want to make a copy of this so you can edit it. But you want to keep the original one, and then you can see when I make a change, you can see the changes. So you can see exactly where the zones are, which I think is very helpful for people that are, new and struggling to draw their zones, right? So all this stuff will transfer to your spreadsheet as a member of my room. All right, so now we have to reevaluate, right? We're kind of, see, we just drew new lugs. So I was willing to short that if everything lined up, and it did almost. Everything was lined up to short that, but the volume said no, right? So now we have new lugs. So I'm not going to go short aggressively here now, no matter which way. So we have our setup here, right, on the Bookmap. I'm going to wait for ATR retest failure to go long. I'm going to wait ATR retest failure to go short. So I'm open to either way. I think this market is going to rip, like we talked about at the beginning of the webinar, based on what didn't happen yesterday and today. This thing should have died. It didn't. The subsequent move is usually much, much bigger, right? That's exactly what we just talked about. That's exactly what's happening. Why didn't I just go long? Well, the way I trade, I'm a day trader. I come up with my thesis, and we were at the red lug. So I wait for new lugs. Now I can go long aggressively. I mean, technically, we are above the yellow lug, right? But many times when you form new lugs, it bounces around Ludwig level, right? So I wait. I could go long aggressive here, especially with a breakout of this. Aggressive just meaning the minute it gets an ATR out of here, 110% an ATR out of the area I just drew, I'm long, right? Versus waiting for ATR retest failure. I will wait for ATR retest failure. I may miss the trade. So you got to understand that and be okay with it. So once again, for me to go long here, I've got two options. I could wait for a full ATR, which is about 9 points, and just get 110% of an ATR and just hop in. Or I can wait for the full ATR retest failure and get in. That's the more conservative entry. So I'm going to wait for that, but you've got to realize sometimes you're not going to get the retest, and it may just rip, and you're sitting here, steaming, fuming because you didn't take the long. That from watching again thousands of these, I'm okay if I miss that trade. When we're bouncing around the yellow lug like this, I want to wait for a retest failure either way. So that goes for the downside too. So I was going to short this last one aggressively, this one, because we just built new lugs, Ludwig levels. I'm waiting for ATR retest failure, and then I will go short. Again, I say we named them lugs in the room. She actually ran with it. She calls them lugs herself just because it's easier than saying Ludwig levels 85 times. I could tell you guys every webinar. She's in my room as well, so she's always telling us about updates, telling us when to roll. Like for instance, today the soybean lugs rolled to January. But if you can go to her site, get a free trial, just put in she's got a free trial text box. Say you saw the stuff on her stuff on the Bookmap webinar, and she's got special pricing for you guys. All right, there's something in NASDAQ as well. Let's go see. I took a little beating in here earlier. I tried to short it. We'll go over that here in a second, but on to the newest setup. See here, 173 sell ice. That is threshold. My threshold for NASDAQ is 150. If you bought the original course, I think it said 120. I've upped it. You know, I've made some adjustments. It's pretty. The old course is pretty spot on. I keep telling you guys the new course is almost here. It's almost here. I'll tell you again. It's just, you know, I got so much going on to finish that thing. But the thresholds in the old course are pretty much spot on still. A couple products are up. I moved up a little bit. Like NASDAQ, it's 150 now. All right, so let's see where we are on our NASDAQ. Bigger picture. Any questions about any of that, Bruce, while I find this and take a break from talking?
Not really.
All right, so you can see here, these were days I split out. So we could merge this into a market profile composite. What's a market profile composite? It's just merging the value areas, which is where 70% of the trade occurred in a day. If they overlap, you merge them together and you come up with a composite. That's what the blues are, right? And they're very, very powerful. And if you just waited for setups at the highs and lows of composites, you would be a very successful trader waiting for the volume setups, right? So, and you can come up with your story for the day too on what's going on based on the composites, right? So you can see here. I didn't want to do that. Why is this not waiting for me? There we go. So we opened up this morning. Open up right at the bottom. When markets move back into profile composites, the tendency is to get to the other side. This was a straight shot to the other side and out. Right? That's very bullish. Many times when markets move out of composite value areas, they'll come back, they'll test the top, then they'll go. Doesn't mean it has to, but this is kind of like a retest failure type of situation as well. So this may happen here just because you can see this is pretty extended. The relative volume is less than normal. We'll look at that here in a second. So this is extreme standard deviation of VWAP. This is VWAP. This is one standard deviation. They call that daily value area. This is 1.5. This is 2. I don't even have 2.5 drawn, but that was 2.5. And you have a baby lug here too. This is like a minor resistance area too. So the point is, you get these algos that revert back to the mean, aka VWAP. So this is an area. If there's not big money coming in here pushing this thing, it's very likely that it will pull back to VWAP or try, right? Which is, let's see if that's confluent with the top of this. It's not showing my universal mouse here. Cursor, 1241. Actually, VWAP's just, the top of that. So the top of that market profile composite is right around daily value area high. So many times as well, it may not even make it back to VWAP, but it'll come back to value area high and then go, and that is confluent with that. So that is probably a very likely scenario. And again, I just come up with scenarios and then I let the real-time volume confirm it, right? So it's the wrong chart, but we need it anyway. You can see in the middle there. I'm just using a 5-minute ATR, average true range. So a 14-period Wilders. This is all default on Thinkorswim. And that's the current ATR. You can see 35.27. Right? Let's actually get these values in here first, and we'll go over the bigger picture in here. So I change my 7, and I'm going to zone in, my zone high and low. So you can see 11,316 is the high, 11,30. I did something wrong here. Should be exact prices. Let's see real quick. So you just want to go where this spike started. Actually, I can move this up. My handy dandy hotkeys working, so I have to sit there and hit edit 45 times. So that was wrong. Actually, this is why, right? So this came down. It was still part of the spike down here. So I at least got to go down to there, and then it actually came down here. So I did have that right. So let's adjust it. That should be right. Yeah. So it's 11,306.75 is the bottom of the zone. Let's just put that in now. And then the top of the zone is 316. got our ATR, we got the top, we got the bottom. I'm not doing the version trade on here. I'm doing the position trading. So lug wise, I know we're above the yellow lug, but I usually will go long on a setup aggressively above the yellow lug. So if we get a setup, I'll get long. But we're so close to the red lug, I'm not going to go long aggressively. Right? I'm not going to go long until we build new lugs, kind of like we just did with yes. I will go short, but I need because we're above the yellow lug.
December iceberg sell and Q 151 contract.
So I just did all that, and now we have another setup. But I will wait for, even with this new setup, I'll wait for ATR retest failure. Let's do it again. So you can see what just happened there, right? What did I just say? It usually happens, right? If the volume is not crazy, you get to these extremes, these algos snap it right back. Now, here we go. Looks like it's going to come back and retest that area. So, you know, you can come up with your own, you know, I wait, if we're above the yellow lug and I get a setup, I wait for ATR retest failure. You could say, hey, here's the setup. I know this is an important area. We're way extended from VWAP. Here's baby lug. I'm going to go short aggressively. You could have just shorted that aggressively, that zone. Like I say, every single webinar, this is the science. There's no disputing 252 sell ice just came in here, or there's no disputing there was sell ice up here. How you trade them is up to you. I highly recommend if you're just starting out, you don't really understand what you're doing, you follow my process, and then you can kind of adapt it to what you like. You know, you don't have to wait for ATS failure. You can get in aggressively if it's an area that you love, right? That's the beauty of the real-time volume. Once again, it's the driver of markets, but whatever you're using, you can confirm it. I don't care if you're using Fibonacci or MACD or what the other 4 million indicators out there that guys go down the rabbit hole with. If you can confirm in the area with your real-time volume, then you have a much, much better chance and a much, much bigger edge, right? All right, a lot of talking so far, not a lot of trading. Once again, I'm trying to get this exact. That's why you got to zoom in here. I know it's annoying to watch, but I'm just trying to get this exact price where this started. So this is up here. This makes a difference because these algos are so precise with the ATR stuff that if you don't have your prices right, you can be stopped out to the tick, as you guys have seen happen about 5,000 times on these webinars. So, all right, that looks like it's accurate. Let's do this again. 1277, 1268. I mean, 11277, 277, 11268. That worked. And then ATR is up to 3675. Now we got our zone values, put that in, and then I can see where I can trade this. So again, let's see where we're at. You know, we're ATR, I mean not ATR, the red lug is about 100 points away, 90 points away, but for me to enter this aggressively, it's going to be about 40 points outside of this zone, and it's still not worth the risk reward, right? So because I respect the lugs that much, I don't want to buy it at a lug. So, you know, this lug is up here, right around here. So if I get in this aggressively, it's about 40 points. I'm in at what is it? What did I say the top of the zone? Probably around 16. Yeah, right around 17. So 17 up to, let's say 60. So that's about 53 points. Well, that's fine. That's a good trade. But you got to remember the way I trade these to stay out of the algo nonsense. Once I enter trade, my stop then goes 110% of an ATR below the zone. Okay? And I understand all you traders, and we're going to go over this here. I'm going to single someone out, it's not by name, but I'm going to show you an email of this is why you guys don't do well trading, because you have these set, you're trying to impose your risk parameters on the market. The market does not care how much you want to lose or how much you want to risk on a trade, right? So what you have to do is you adjust to the volatility and you adjust your size, right? So you have your account size. You shouldn't be risking more than a 1.5% or 2% on each individual trade, and then you adjust your size. So I don't like risking 90 points on a trade, but this volatility is telling me that's what I have to do. So I cut down my size. It's the same. It doesn't matter if you're risking a certain percentage of your account. You just change your size. It doesn't matter what the point value is, right? So if I made this ATR 90, which it gets up to sometimes, right? I'd be risking 207 NASDAQ points. You're thinking, well, what the hell? I can't be risking that. Guys, it's about the volatility. So if I'm risking 200 points, this ATR is telling me that this could go 300, 400, 500 points the way it's trading, right? So it doesn't matter what that is. It matters what 2% of that is. That means I can put on basically, I couldn't even trade a full contract. I got to go down to micros and trade 8 micros. That's what trading is. You cannot impose your risk limit. I can't tell you how many emails I get. Well, I like to risk 10 points on NASDAQ. Okay, great. Then you're going to get algoed out. It's like it's about a 99% chance. If you're just risking 10 points on all your trades, that's just your flat risk, you're going to get algoed out, right? You're not adapting to the dynamic volatility of the market. All right, I'm getting into rant mode. All right, so that means I can trade 2. Let's just take a look at this. Remember I said I'm not going to go long aggressively here. So either way this breaks out of the zone, I need to see ATR retest failure. And this tells you as well, what is an ATR? So again, to go long, I need to see this get, don't be confused by this, but just look at the price, right? So just think about this, right? So the top of the zone is 77. We know the ATR is 35, right? So that shows me, sorry, it's over here. So that means 11, 3, 3, 12, 25 is a full ATR out of there. So I don't have to sit there and do it by hand anymore, right? So I know for me, if I wanted to go along this setup, which I'm not going to just because we're so close to the red lug, but say it's just a normal trade, I know if it gets to 3, 12, 25, that's a full ATR. Then I wait for my retest and my failure. So the point is I don't have to sit there and keep coming in here and figuring out in my mind, okay, the ATR is 36, the top of the zone is 77.5, 36 plus 77.5, right? I just put the values in and it's right there. So I know when this market gets 11, 3, 12, 25, it's got an ATR out of that zone. Why is that important if I'm not going long in this certain situation? Because that disqualifies the short though. We just talked about this, right? So the way I trade, I'll still short this, but if this gets up to 3, 12, 25, the short idea is canceled and I just wait for my new trade, right? So that's why it's important both ways. It's important if you're entering aggressively and or you're going to disqualify the short. So this trade, the short is still valid. I still need to see this, and this, right? As long as it doesn't get a full ATR above here. And again, if you guys are new, first webinar, you've only watched a couple of these, I'm sure it's confusing. One, you got to remember I'm doing this real time, right? So in my trade room, I have literally, there's 400 live webinars for the last almost 2 years in there that you can go back, slow things down, and understand what I'm doing. I can't get into basics. I'm getting very basic in this webinar, but like in my room webinars, I don't get into basics because it's like I'm trying to trade, right? So there you go. So we're going to wait and see what happens there. A lot of talking. Any questions, Bruce? I can take a breath. Oh, wait. So first of all, what just happened here? So we did get full ATR here. Forgot about this trade. So remember, I was waiting because we're above the yellow lug. I'm waiting for ATR retest for this setup. Right, so here to get the ATR. What was the ATR? See it right here. Based on my zone, ATR was 37, 34, 15. So if this would have just come down to 37, 34 and done that, I'll take the short. I'll still take the short. It's even gone more than an ATR, but I'll still take the short. I'm waiting for this retest of this zone, as long as something new doesn't come in, right? this is what I'm talking about though. This is my style. This is the way I trade because we're above the yellow lug. I wait for ATR retest failure. So I'm sorry because we were dancing around the yellow lug at the time, right? So I'm waiting for that to happen. I may miss this trade on the short side, and I'm fine with it. One, like I said, this looks very bullish anyway. What I think is going to happen here. So I'm fine with not being aggressive, but that's just the way I trade. When we form new lugs, we're dancing around the lug. I wait for that, and then that. So now I'm just sitting here patiently waiting. If a new setup comes in, I got to go through the whole process again. Right? I'll change colors here so I don't get confused. All right, so that is that. No questions, Bruce?
Yeah, no, there's a question here. Hold on.
Oh, there's a lot of talking, no trading, but it is what it is.
So, no, we're good in Discord, but in YouTube. Question about the previous ES short setup didn't make a full ATR, 9, only 7, retested, and then went. Is the full ATR if that close discretionary? So I guess the question is, if it didn't go full ATR, you wouldn't get involved.
For which product?
This ES short.
1 second. You mean, yeah, for the way well, no matter what, even if I was being aggressive out of this zone, I wait for 110% of an ATR. So yeah, if it didn't get a full ATR, there's no way I'm going short, even if I was being aggressive. But the conservative entry, I wait for the full ATR, the retest, and the failure. Is that what he was asking? If it doesn't go the full ATR, then I'm not going short at all,
Yeah,
regardless of how I'm trading this, aggressive or conservative.
I guess that's the answer. Yeah.
But now this is obviously outside of an ATR. It's almost 2 ATRs, and that's kind of a wink to my room because they're trading this strategy. But now I'm just waiting. I sit and wait, right? I let this play out. I let these algos play their games. It does this, then I'm going short. If it does this, I'm not going short, and the short idea is disqualified. That's why I wait for retest failure, right? You could say, we're actually doing another strategy in my room. We're doing like 1 by 1, but another method you can do if you don't want to wait. So, because this happens all the time too, it's just not as certain as that, getting short after that happens. But you can say ATR when it gets to the zone. The minute it gets in that zone, you just short it and risk an ATR above it. So you're not waiting for a full failure out of there. I've just determined, we're trying this method. I just started this trade as our second test trade, and I show you guys this all the time. This is so important. This is how the ATR trade came in existence, because I just have seen it so many times. So we're going over trading in the zone, and we can get in this later when I go on my further rants, because I want to stick with my first rant here. But we just came up with, this is just an exercise. This is straight out of Trading in the Zone. Great book. Incredible book. Pick any market, any futures market that is liquid, you can afford to put on 3 contracts. Choose a set of variables that define an edge, right? This is the edge. This is the edge in trading, in futures trading. I've never seen anything stronger. I don't know if I ever mentioned that before. This exercise is not about system development nor a test of your analytical abilities. It's to prove to yourself, if you have an edge and you follow your variables, you'll make money, right? But you got to do it every single time. Trade entry, the variables you use to define your edge have to be absolutely precise, so it does not require you to make any subjective decisions. This is really, really, really important. Even the guys in my room, and me sometimes, because it's not easy, guys in my room that struggle with sitting in trades when they're taking this ATR trade, it's just black and white. You have your values, you have your entry, you have your exit, you put in your trades, you let it work. So if you're having trouble staying in trades, that is a great exercise. These exercises are great for you. And again, in my trade room, you get that spreadsheet and you just put it in and you let it play out, because I know it's an edge. We've already seen hundreds of them just in the couple months that we've been doing it. you know, that works because of basically of the, not basically, because of that, right? So, so does that require you to make any subjective decision or judgment about whether the edge is present, right? So this is a perfect example. I draw my zones. I know that's my edge. I know where I'm getting in. I know where I'm getting out. There's no subjectiveness in my position trading or my or this or the ATR strategy, at least on my entries. I'm subjective with my exits on my position, but not on my entries, right? There's certain situations where I will say I'm going to pass on this trade, like for instance, like going long. You know, wasn't going to go long, like this Nasdaq trade into the red lug, right? There are some exceptions, but other than that, I'm pretty automatic with what I do. Okay, so now this is actually retesting this zone, so we're getting a retest. So now I'm getting to short that if I get retest failure. So actually, wait, was that this? I take that back. Sorry, this was the most recent one here. So what I can do here. No, this is where we were close to the red lug. I take that back. Sorry, guys, I'm getting a little confused here. A lot of talking today. Remember, so if we weren't so close to the red lug here, this is a situation where I would now be looking for ATR retest failure, right? Because this is the ATR, pretty close. What did we say it was? 17. Let's see. I know you guys are probably confused here, so I'm kind of rambling. 312.25, right? So this is almost there. Almost got there. Up. We're still 12 points away. So this has not gotten an ATR out of here yet, so I can still short it. We'll come back to that. Hopefully I'm not confusing you. What I'm waiting for now here is we did get the full ATR. Here's a retest. If it gets up here, failure, then I'll go short. I totally lost my train of thought, what I was telling you guys.
December stock by ES. 679.
So now that whole idea is done, and I got to draw a new zone in ES. So anyway, back to this. If the market is aligned in a way that conforms with your rigid variables of your system, then you have a trade. If not, then you don't have a trade, period. And the whole idea is to trade like, and then we have the trade parameters there, right? And the whole idea is to trade like a casino, right? That's how casinos make money. That's how they take your money from you, because the math is in their favor, aka edge, and they just will let players play, and they know over a year's time they will make profit. It's just math. This is just math, right? This is the edge. This is the math, is the real-time volume setups, knowing where they're at, knowing how to draw them, knowing how to trade them, and then you just trade. And it's not, the less subjective you can make your trading, the better you're going to do. All right, let's do this all over again. And now I think we're firmly under that yellow lug, so I could short aggressively, even though it's not feeling very good, because what we talked about earlier. Below the yellow lug, so I can take this short aggressively if I end up shorting. So let's hurry up and get this drawn. Just gonna get rid of these zones because this is old news. Get that back. Once again, more buy stops. This is another 700, 689. You can use that red line to help you draw your zone. Popped a little above there, right? You want to draw your zone where all these prices are in the spikes. I think that's correct. There you go. All right. So let's do this all over again. 36 quarter, 35.25 is your zone. Zone 2. All right, so that's that. Now we find our ATR. ATR is 8.38. You can see it at the bottom and in the middle there. Plug that. All right, so now we go down to the position trading strategy. So I just said we're below the yellow lug, so I can enter in aggressively at this price. Right? I could put on 3.5 contracts. I'm risking 20 points. This does not matter. I don't care if it's 100. This adjusts, right? So if it was 100, that means I could put on maybe 3 micros, right? It's 19. So I'm going to go on my rant here in a second, showing why most traders lose money or don't succeed. So 37.26, I will go short. Obviously, I can't trade 3.5. We'll just keep it at 3 because this is where you can be a little subjective too, because I still think this market's going to rip higher, but the real-time volume is telling me that's not going to happen right now. And just because I think it's going to rip higher doesn't mean it has to happen right now, right? So I'm a day trader. I'm trading off real-time volume that's happening right now. If it's truly bullish like I think, then you shouldn't be seeing bearish setups, right? So I'll still trade on the short side. It's not comfortable, but the real-time volume is telling me something's not right here for right now. It's not ready to rip. So I'll trade on the short side, right? Let's put this in. What did I say? 26. I can trade 3. So that is the aggressive entry. Why? Because we are below the yellow lug. That's how I trade them. Right? Below the yellow lug. And what happened here? What story do you guys see here? This is really important to come up with your stories. What do we talk about? So this thing tried to get out of here, back inside. What's the tendency? Go back to the other side, right? If it can hold out of here, if it gets back out, then that's just giving me another, change my tune, saying, okay, this thing's now bullish again. But right now, if this, like I said, you have to adapt. It's always if-then scenarios. It's not, I want to be long this market and I don't care what happens. I'm going to buy and I'm going to hold, or I just want to buy. If this was truly bullish right now, why would it come back inside this composite? That's what you have to ask yourself, right? Why would it not hold if you use the Ludwig levels? If the market's truly bullish, it should hold prior red, directional yellow. It should hold in this area and move up to red. Why did that just fail too? Why did that fail? Why did that fail? Why are we potentially getting bearish setups if I get filled on this? This is called adapting to the market. You cannot impose your will on the market. I am leaning bullish here. But everything right now is telling me this thing is not ready to rip, and it may not rip. I may be wrong on that thesis. What I'm not wrong is real-time volume is telling me get short, potentially. See what I'm saying? So before I forget, this is what I'm talking about. This is an email I got the other day. I showed this to my room, screenshot it, I took the name out. This is an actual email like 5 days ago. If you're on here, I'm not putting your name on, but I'm just showing this is why you're not going to make it. I even put this in the email back to him. Overall, in the long term, if you keep doing this, you will not make it. Nobody will make it if you're imposing your risk on the market. I entered Bookmap's Discord last week and began listening to your videos. I'm attracted to your system because it's mostly mechanical. That's what you want. Take the subjective out of it, correct? But I can't handle the huge ES stops. What does that mean? It doesn't matter if you're adjusting your size. I don't care if I have a 100-point stop. You're adjusting to the dynamic volatility. You've mentioned something else you're working on in your room. That's what we've been talking about, the ATR trade. My discretion, here we go. My discretion in ES trades use 5-point stops. What the hell does that mean? Like, who cares? The market doesn't care that you only want to lose 5 points when you put a trade on. I enter 5 MES and place a 5-point stop, which is about $150 risk. Again, you're imposing your will. You're imposing your will. And one trade with 5 be with the new trading system and keep the risk at 5 points. Guys, I'm begging you, please think about this rationally. It doesn't. What do you think do you think these algos don't know how retail traders trade? You think they don't know that guys get in areas and then they trail their stops? What do you think the whipsaw is? The whipsaw is the algos stopping you out because they know traders get long and then they like, yes, I got long here. Awesome. Well, I'm not going to risk any money. If this comes back, the worst I'm going to do is scratch. Guess what? Then the algos snap it back, they stop you out, and then they go. How many times a day does that happen to you? When are you going to realize that that is not the way to trade? You are going against the brightest minds in the world. You're going against 80-90% of the trade is algos, whipsawing the market. Why are you trying to impose your risk on the market? The market doesn't give a flying you-know-what that you only want to risk 5 points on your trade. The market does care about volume areas and Volatility, the ATR, average true range. That's what the market cares about. I cannot stress enough. It just makes my, as you can tell, makes me my blood boil when I get emails like that. It's like, what do you not understand? You're literally just handing your money to the algos when you do that. So, and this is the system I developed to try to stay out of the algos. So if I get short here, my stop, does it go, hey, I don't want to risk 5 points on that? No, it goes, hey, this is the volume event for me to, for these algos to prove this is not valid. I need to see a full ATR push above here, and it doesn't matter what the amount of points is. You just adjust your size, please. I'm begging you guys. If anything, just don't send me any more emails like that, unless you want me to have an aneurysm. All right, that's my rant. Any questions on any of that, Bruce?
Let's see. That was a good one, though.
Out of breath on that one.
You have to, yeah. It's like a workout. No, we're good. Go ahead.
I have to now delete this. There's a new setup, right? Again, it doesn't usually unfold like this. This is what it is. You're not usually getting setup after setup after setup after setup all in a 10-point range, right? Now this is getting interesting. This is the first ice we've seen, right? What's this? This is a double whammy. What's a double whammy? It's one of my 6 setups that I trade off of. That's in my course. This is 700 stop run, more buy stop runs. And then you have, this is real close to threshold, actually I think this is, and this is 700. So my thresholds for ES are 500 stops, which that is above 700 ice. This is a vintage double whammy. Right, so what's a double whammy? The dumb money puke, which there's been a lot of today, the retail trader puke into the waiting hands of the smart money. Does that mean it's going to turn around and sell off? No, but the likelihood is much higher that we're going to go down from here than up. But I don't just automatically short, right? So let's just get this stuff out of here. I'm getting real sick of seeing these stop runs, I'll tell you that. I don't think the market cares. But I'm getting old drawing 85 zones and not trading. All right, so we want to incorporate all these price points in this spike. I'm just going to draw this now. I may have to adjust it. I use dark blue for my double whammies, just so I know what it is. That's that. And that's that. All right, so now we may have to adjust this as I scroll over, because I'm incorporating all the prices in that spike. Right, so let's see. So you can see this popped up, so I use my little handy dandy hotkeys. Drag this up to there. Now that incorporated the spike. All right, I can bring my bubbles back. And now we got to do the whole process over again. Again, it's annoying. It is what it is. Usually you don't get 85 setups in a 10-point range, but that's what's happening here. So now let's take a look at lugs again. You know, technically we're still below the yellow lug, so I'll still take this short aggressively. For me to get long, I need to see ATR retest failure. And this is trying now again to get out of here. This is a pretty defining moment. Failed, got back in. Remember I said the tendency to get to the other side. Let's try one more time. So you have to adapt. It's if-then scenarios as far as thesis was, right? I was thinking, one, I thought we were going to rip. Then it came back in. Then I thought we were going to break down. I was trying to get back out, right? It doesn't matter what I think. I just come up with ideas, but I let the real-time volume guide me. So this is a pretty important area here. Is this going to get back above yellow and get to red? Is this going to get back out of here? Well, we're going to find out, and now I have a setup to help me trade that situation. Could you imagine if you're just staring at charts, even Ludwig levels, right? Or market profile composite. This is the point of the real-time volume. I don't care what you're using here. This is all very powerful stuff. That's why I use it. But you just got your head whipsawed back and forth. If you're not using real-time volume and you're staring at these charts, you're like, oh yeah, I'm long. Oh crap, I'm out. Okay, yeah, now I'm short. Oh crap, I'm out. Ludwig levels. Oh yeah, I'm long. Oh, it stopped out. Oh wait, now we're back. We're getting back above. I'm gonna go long, right? It's like, this is why you need to use whatever you're using and then attach the real-time volume to it, and then you have yourself a real edge. Right? This is a perfect situation where this is whipsaw city, right? And let's take a look at this. I'm sure this is Not strong, strong and quite strong. It's normal. It's not crazy. You could look at NASDAQ though. Look how bad NASDAQ is. This is Algo City. That is that. So you go ahead and you put in your trade and you go ahead and risk your standard 10 points in NASDAQ. Do that about 85 times a day and you're going to get blow out your account. Right? That's the point. You want to adjust to the volatility and not just be putting standard stops. I only want to risk 5 points in the ES or 10 points or whatever in NASDAQ. All right, so now we're just waiting to see what happens here. We're still below the yellow lug, so I'll do exactly what I was going to do on that last setup. Let's put our values in. Again, 39.50, 37.50. ATR. And an ATR. Position trading. We'll go short, 28.14. I'll round it up. We'll get it at 28.25. Or you can round down. Actually, I'll round down. I'll round down to 28 just because, again, I still think this market's going to go higher, but we'll see. Same thing. Doesn't matter what my risk is. It matters this has to adjust. So I can trade 3.28. So I'm putting on 3. And if I was risking 100 points, I could put on, 5 micros. Doesn't matter what you're risking point-wise. It matters how much you're risking money-wise. So 28 is where I'll short this aggressively. You guys, this is a perfect example of Algoville. This is just whipsaw city. Look at this market. I mean, looks like it's going up. Looks like it's going down. Looks like it's going up. And what are they doing? They're picking off people with their 5-point risk left and right. Right? This helps keep you out of that nonsense. You guys, this isn't hypothetical. I've been doing this trading this style for 3+ years. Right? I've used my experience to help guide you, at least initially, like I said. Right? Trade the way I'm trading them, and then if you want to adjust as you get better and better and better, then you can come up with certain situations like we were talking about earlier, where you say, okay, I don't need to see ATR retest, and so on and so forth. But this is not me just guessing what I'm doing. I've been doing this for 3+ years, right? So use that experience in your favor. All right, now we just gotta wait. Let's see what happened over here. So we talked about this being this was the last setup here. Remember we said the short would be disqualified. That was this. The short would be disqualified if this got an ATR, which was like, I think it was 11.312, which it did. So now I can't go short. That's disqualified. I could go long normally. Why am I not going to go long this particular setup? Because we're so close to the red lug, right? So that is one subjective thing. We were talking about subjectiveness. That's the one thing I'll add where I'm just not mechanical on that trade because I just know how powerful these lugs are for support and resistance. I do not want to be buying, I'd be getting in. So let's just look at this, right? Let's see where I'd be getting in here. This is already set up, right? So if I was going to go long, I can get in at 16, 11, 13, 16, right? And then I stop out at 29.25. So I'm risking 86 points. So if I get in at 16, the red lug is up at, this is a very easy way to judge it. Red lug is at 62. Well, what's that? That's 46 points. So I'm going to be risking 46 points to get to the red lug that I know is very important, right? That usually will stop the market. I'm risking 86 to make 46. You're not going to make money trading overall if you're taking 1 to 2 trades. What you're looking for is 2 to 1 trades, right? So if we were way down here and I'm looking at risking 86 points and the red lug's 160 points away, that's the kind of trade that you want to be taking, right? So that's how that's the subjectiveness in this system. You've got to determine, okay, hey, is the risk worth the reward here, so on and so forth. You can still take it, but if this turns around and sells off, well, then you're going to lose 86 points, and all you were really going to get out of it is 46. So it's like, I'll pass on that. There's another setup right around the corner, as you've seen in ES when 45 has fired off today. All right, let's see if anything else. working here. Surprisingly, nothing has been going on. I mean, look at this in ES. This is all the products. Oh, and I've added too. We're not going to get into these today, but I'm going to start watching these, especially for reversion trade. I've added, I know I'm going to get yelled at for Bruce for adding a bunch of products because that slows it down, but this computer should handle it. This is like lean hogs. One of these is hogs. One of these is cattle. Soybean oil, soybean meal, right? So I'm going to be looking at like 20 markets now. I do have the currencies up here, but the problem with currencies, they don't show icebergs anymore. Again, I have my own reasons why that is. I've been told that's otherwise, but the problem, like I said, you're not getting all the information, you're just getting stop runs, but I want to see how they work with the reversion trade that we're working on. And then my other ones are copper and silver, so I'm watching all this stuff, but just to know, for reversion trades, there's going to be many opportunities. All right, so now we're just waiting. So like I was showing you here, you can see nothing is fired off today. It's just been literally ES. I mean, a couple of Cuban. ES, 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 ES. So this was, like I said, a different scenario here where finally we got some icebergs in here. So let's see how this reacts. I'm going to go short aggressively. I will go long this setup too, but what cannot happen? For me to go long, anybody tell me what cannot happen for me to consider a long here? Let me know if there's any answers, Bruce. If there's not, you all get Fs for the day. I know all my talking's been worthless. Anything?
So
Killer?
say again.
Killer?
What was the question, Scott?
Killer?
I'm sorry.
I will consider a long here. ATR retest failure because we're still below the yellow lug. What will disqualify me from considering this for a long?
Answers. Maybe 2 ATRs over the highs.
If this gets an ATR below here, the long idea is disqualified. I talked about this a little earlier. From my studies, from my experience, if this is truly a bullish setup, it should not be able to push an ATR outside this zone. If it does, the short is disqualified. I mean, the long idea is disqualified. It even shows it on the spreadsheet right here. Invalidation price. That would be right now with this current ATR. If the market is able to get to 37.28, 37.29, that would be a full ATR outside of here. And you can see where my order is. I'm 110% of an ATR. That's why I'm going to enter there. I just go just outside the ATR. But if this is able to get down to 37.29, my long idea is canceled. Potential long idea. Right? Because once again, if this is truly bullish setup, this should not be able to push a full ATR. It should not be able to get through these algos that love to revert it back. If it does, then something's up, and I don't want to take the long. And I just wait.
Yep, a few guys got it here. Let's see, Joe in Discord got it, and then we had some latecomers come in who got it kind of a little after the fact here in YouTube.
Very good. You guys all get A's for the day. You're in my room. You get the teacher pet award.
I've copied and pasted your website and Twitter and email and trading room in there. So guys, if you want to reach out to Scott directly, if you want access to that spreadsheet, that's where you got to go.
Yeah, please don't email me asking me for the spreadsheet. I mean, that's the proprietary factor of my room, right? People pay to be in there because they get to hear me twice a day, and they have access to all the webinars. They have access to the spreadsheet. So it's like there's some things, I do these Bookmap webinars for you guys for free, right? No one has to pay anything, but there's some stuff that I have to keep, otherwise the guys are in my room be like, well, if you're giving all this information away, what the hell am I paying for, right? And guys, I put a lot of work into this, right? Like I could be, one of the beauties of a trader is having the freedom to just get up and leave, right? Especially if your day is not going well and so on and so forth. that's what you actually want to do, but I don't have that freedom because I have to be and that's fine because I like educating. It makes me feel good to help you guys learn how to trade and fight back against the man, not the man, against the big money, right? Because I'm very jaded for what I went through. I have like this quest to teach as many people as possible to fight back against these bigger houses, right? And it also helps me from a trading standpoint when I'm going through this stuff, talking it out, one, right? And it just helps me, kind of get things straight, what I want to do. And what really helps me is because one of my biggest issues, I'm a very competitive person. I'm a very emotional person, right? I accept that. I don't try to hide my emotions and keep them bottled in. And any psychology book that you read about trading says you should never try to act like things aren't bothering you, right? Get it out, be done with it. But what does help me on these webinars is I can't just completely go off the rails and make a complete ass of myself, breaking stuff, and it just helps keep me in check. So there's a lot of reasons I do it because you get on the Twitter all the time in any profession or anything that's when guys try to share their knowledge. Well, if it works so great, why are you showing the public? Because I want to. I want to help. It makes me feel good making profitable traders. It makes me feel good fighting it back against the very algos and the bigger firms that blew me out the first time. So it's literally that's my driving force. You believe it or you don't want to believe it, doesn't matter. But the point is I have a paid room because I do put a lot into that thing, right? So it is my time and you are getting my knowledge. So the whole idea of it, you're getting 20 plus years of knowledge. You don't have to go through the trials and tribulations that I've gone through. You can just learn right away. Even when you see me act like a moron, I've been making tons of mistakes in my room. Like, you can see, and then like losing it and talking negative. Like we've been talking about in here a couple times, the thinking properly. Even yesterday, I started going down that rabbit hole where I'm like, I know this is going to happen. I'm human, guys. Like I'm an experienced trader, but I still get those emotions. And so a woman, a trading lady from my trading room said, you're putting that out in the universe. And it's 100% true. When you start talking like that and thinking like that, then it just, for me, I go in a downward spiral and then I go into a slump, right? So it's like all the above. That's why I have that trading room. It helps me, it helps other traders, so on and so forth. So that's why I'm sharing my knowledge, because I want to help you guys beat big money. And that's the goal, and the algos. All right, I am worn out talking. Any questions? There's really nothing to ask. I haven't done anything, but guys, these are markets, right? And this is what you have to be able to endure. Crappy trade like this, you have to endure. Like Monday, I got the reversion trade has just been golden, and I just got run over like 3-4 times in a row. It was just weird trade. You're gonna get those days. You're gonna get days like this where it's just like watching paint dry. Right? So you got to accept that and realize it. Like a day like right now, if I wasn't doing this webinar, I would be out my door right now, probably go hit some golf balls, right? So you got to realize that, it's just not be forcing trades. If I don't get what I need to see for my setups, I don't trade. That's one of the probably top 3 aspects or attributes of trading is to understand when you're trading, when you don't trade. Not putting on a trade many, many times is as important as putting on a winning trade, right? Because you're probably going to lose. And if you have a losing trade, you got to take a trade plus another trade to get that back and be profitable, right? So the moral of the story is if the market is not conforming to what you want to do or what you want to see, you get up. It'll be back to normal in no time. All right.
I don't know, Scott. I mean, I think if you started breaking stuff, like you might go viral.
That's true. It's going to be costly. So I got those new monitors. This was a while ago. This is probably a year ago now. I got these. You can't see it now. Remember, I used to be on the video. We used to have video when it wasn't in Discord, and when we used to do the go-to meeting, and you guys saw my screens. I got these really huge, large horizontal screens where I could put 3 Bookmap screens on one, or charts on one. Anyway, like I had a bad trade and I had a pen and I threw my pen at the screen and I cracked it. And I just bought it. It was like $600 or $400. And I'm like, yeah, I'm not gonna do that again. and then I got to explain it to my daughters and my wife, and it's just like it's embarrassing, is what it is. So yeah, I don't need that going viral. I get embarrassed enough in my own household, acting like a 4-year-old kid when I get mad, but I don't need that.
I don't know. You might find it about 10,000 new users all of a sudden.
Yeah, maybe one day I'll break something. I've been close. But I haven't broke anything on air yet.
Yeah, you gotta share that video that's R-rated.
Oh, yeah, I'm going to do that. So as soon as I'm done with this course, well, like you said, we'll have a special event, and I'm going to show my old trading days. I used to put the camera behind my shoulder, and you can literally watch me scalp, trade thousand lots at a time, and you can see who I'm trading against. You can hear me bitching about this guy that used to manipulate the market. It's going to be quite fun. It's going to be quite an event. And like I said, it's going to definitely be R-rated, maybe X-rated for some of the stuff I'm sure I was saying back then.
Yikes.
I tell the story to my room all the time, like it used to be. So, when you first start back in my trading firm, you first start out, you get paired up with somebody. You got a room with somebody, right? So there's 2 traders in every room. And then when you establish yourself, you get your own room, right? So I was in my own trading room, door closed. I would sit there literally all day, every day, for 8 hours straight. Like I would run to go to the bathroom, come back, and that's it. So one day, some guy was walking past my room, and they knew I was at my own trading office. He went up to the owner and he's like, "Who is Pulcini talking to in there?" He's like, "Oh, that's his imaginary friend." Because I would just talk. I still do it, and that's what's great about the webinars. I can actually talk to somebody, but I just would talk all day long out loud because that's the only way I would be able to have my head not pop off of my shoulders, trying to bottle stuff up. So it was pretty comical that people would walk past my office thinking somebody's in there that I was talking to, and I was talking to myself. All right, hey, we might actually get a trade here. Let's make sure our ATR is still correct. 8.5, it's actually down to 8.12. All right, we can get in at 28. Move that up. See if we get filled. Bang up trade though, baby. This is incredible. Algo City is what this is. You can see here too. This is when you head for your door. Unless you're doing my reversion trade. The reversion trade is actually geared for the algos. It's playing the algo game. But when you're looking for position trading, when you start seeing this, you should be out your door. Go do something else. Look at that. Yeah, no thanks. That's why we're doing that. And that's why we're doing that. If you know how to recognize that, you get the hell out of here and say, I'll be back. Oh, and then, of course, we have 14 Fed guys talking today. This is just insanity. I mean, it's just every day. My trade room hears me bitch about this every day. Like, I just cannot remember when this has been like this. So you can see here. Look at this. Of course, I screwed it up. Hold on. See, I put negativeness into the universe, and then it comes back and bites me. Technology bites me. Okay, so this is what I was going to show you guys. So you need to be aware of this at all times. So if you've been trading and you don't understand why the markets start whipping around, this is why. Because you get about 14 a day lately. Here you go. 10:30, 10:45, 11 o'clock. Then you throw some ECB. That's coming out in an hour. Here you go. Here's another Fed guy. So you have 4 Fed dudes talking today. And then an ECB, which has been affecting the market too. With what we're doing the reversion trade, I just shut it down when this happens because you have to realize these algos. All right, I'm filled to that, of course, to the exact tick. Just go a couple points lower so I don't have to complain on the webinar. All right, so first of all, let's get our stop in. Again, you don't have to guess. The spreadsheet tells you with the new ATR. Here's my entry. Here's my stop. 48, I'll round up, 48.50.
Through December stock sell CO, 480 contracts.
There we go. Now we got something going on. So 48.50 is my stop on this short. I'll go back into my rant on the Fed guys here in a second. Let's get this. Finally got something going on here. A little crude, and that's large. My threshold in crude is 150. You see 400, 500, that's large. That's 480 stops. Pretty important information to know. If you are just staring at a chart, you have no idea this is happening. Red line started, finished. I think that's correct. Make sure you get all your prices that were in that spike. I did. Bring your bubbles back. And there you go. Put the prices. Prices 85.86, 85.68. Come to your spreadsheet. 85.68. That's the zone. ATR 28.6. Now we know where we can trade this. So now we go to our lugs. See where we're at. I'll come back to this rant here in a second. I'm not kidding. I complain about it all day, every day. My room members got to be like, I got to hear this again. We'll go over there, how they can used to be able to trade, stuff like that. All right, so we're still above the yellow lug. So what does that mean? Anybody tell me what that means as far as a setup? If we're above the yellow lug, what do I do? See who else is going to get the A pluses today. How do I trade this setup that just came in? If we're above the yellow lug. Any answers? Or y'all get Fs?
Do nothing.
Bueller.
Long ATR 110.
Exactly. So I'm getting I'll go long aggressively, 110% of an ATR outside of the zone. Short, I need to see what? ATR, retest, failure, 110% out of the zone. Right. So I'll trade it either way, but I'll be more aggressive above. So what do you see here as far as story though? Try to get out, failed, back in. What do you expect? Other side. Did open up at the point of control. Point of control is important too. So if you were short, you want to potentially take some off there, especially if it's confluent with something else. If you are not, I'm just giving you some examples. Bigger picture. This looks very bullish, right? So, short-term bullish. So you had this, broke down, a little more balance, broke out, got through this high volume node, got through this important zone. This zone was very important. This zone was directional conviction up, buying tail, directional conviction, bunch of tails. That's where we broke down from, and it just ripped right through all of that. Now it's retest so many times when markets rip through resistance areas, when they come back, they're now support. So we got that. That looks bullish as well. I know we're above the yellow lug, so it just makes me even more confident that I can trade to the long side. All right, so now go long, I can get in at 86.17. Risk in 81 ticks, doesn't matter. It matters on risk of your account size. I can put on 4 CLs. I get in at 86.17. I step out at 85.37. I can get aggressive. I don't wait for retest failure because we're above the yellow lug. So I put in my get filled there, and my stop goes 85.37. So I will wait for that obviously until I get filled. If this does not, if this ends up breaking, remember, this looks like everything looks bullish. I'm letting the real-time volume tell me if that's true or not. If this is able to push an ATR below here, retest failure, I'll go short, and then that is disqualified. The long idea is disqualified if it's able to get an ATR below there. If this is truly bullish, this should not be able to push an ATR below the zone. Is ready and waiting. I'm short here, being tortured. Nothing new in NASDAQ, so it's just been the crude and then the, yes. It was 30 minutes ago. And that's what we're trading off of here. This was that double whammy, right? So we talked about the tendency for double whammies are to hold. You had the dumb money puke into the waiting hands of the sell ice. Now, if this starts rolling down, where are some of my targets? This is where I get a subjective, right? So depending on what this looks like, I wouldn't get out of baby lug because it's so close. VWAP is a potential. I don't usually get out of VWAP unless it's confluent with something. I don't know why my universal cursor's not working here. So VWAP is down at 37.16. So that's an important area where I'll get out a half. You see right there, it's this composite's point of control. Right there, that's VWAP. And then it's this prior. We've traded through here a bunch, but it was still respecting it. That's why I kept it. I'll probably take it down now. I'll cut it out right now, but that's pretty close to the top of that as well. So that is an important area where I'm going to get out of half my, if this rolls down here, I'll get out of half my position, and then I'm going to hold the other half and see if we can get down to blue lug. And then I'll be out. Right, so I can cut this now, I think. And also, guys, the Sierra chart, very labor intensive. It's very cost effective, or that's the wrong word, but it's cheap, but you got to do everything yourself. Remember my room, you get the templates to everything I'm doing, including this. So you just literally just bring in, you can see here, I'll show you guys quickly what's going on in my neighborhood. All right, so you get only my stuff. This was last night for junkies, by the way. This is I just put the reversion trade work for you extended trading hour junkies. But anyway, you get Ludwig levels history because those change once they reset, and then edge. We talk about this. I'll see if I can talk about that. And then you got the templates for everything I'm doing. So just another benefit of my trade room. All right, this is moving. What did I say? 37.16. And what do you have down here? Let's see. Oh, that's, yeah, and you got this area too. This is spot gamma. So anywhere in this area is important. I know VWAP's right there. I probably won't wait unless it just rips down. So this is another thing. Let's see if this happens. What I'm going to do here, this might bounce off this zone just because it's a prior volume area. It wouldn't surprise me at all. Plus, it needs to torture me a little bit. So I fully expect this to happen. Again, guys, when you expect it to happen, especially with the volume this bad, this is very likely to happen and be tortured for about 2 hours. But this could just rip through here. If it does, what was I just tell you guys? I forgot what I was going to say. But I will watch this area to get out of a couple. Or not a couple. I'll get out of two. I'll let one ride. Just because on top of it, so this is where it gets a little subjective, right? I still am bullish this market short term, right? It's really not violating anything here. It's just pulling back a little bit, right? This is the balance from yesterday. I can see it pulling back here and then ripping. So it's like instead of getting out of, like I can make a decision here. Do I want to get out of one at that 37.16, that VWAP area, or do I want to get out of two? I'm going to get out of two because I'm ultimately bullish, right? And like I said, here we go with the algo nonsense. This is going to bounce right off this prior volume event and probably come all the way back, play their game. So this is exactly why, right? So it's like, okay, you got short with me and you're like, yeah, oh, I don't want to get back. I'm gonna stop out 5. My standard stop out's 5 points. Now it's going to pull back 5 points. It's going to stop you out, and then it's going to drop, and then you're going to sit there beside yourself the rest of the day on why you didn't allow the trade. Follow the rules. Make this market prove it can get above here, or a new setup. The ideal situation is this starts moving down, and I get a new setup, and then I trail my stop to the most recent setup. And you can. That's how I trail my stops. Not, I don't want to give back my mortgage money, my car payment. Not, I want to break even on the trade. I either make this come all the way back to stop me out, which would suck, but happens sometimes, obviously, or I wait for a new setup, then I trail my stop, or pay myself when I'm right. Pay myself in important areas. Another bit right here. Number 5, I pay myself as the market makes money available to me. And you can see these are mine, what we've been talking about all day. Ludwig levels, market profile composites, highs, lows, point of controls, VWAP, standard deviations, important predefined zones based on candle structure, which we've talked about, everything on here we've talked about today, right? That's where I look to get out of trades. Not all of them. I try to hold a portion. Oh, by the way, this is real shocking that this happened. How did I know that was going to happen? Oh, because it's 90% of the trade are algos. And when you get volume like this, you're going to be tortured. You can bet on it. Right? Think you got it? Oh no. Think you got it? No. Think you got it? No. That's what this is. That's what that is. All right, so that's being tortured. Let's see what's going on in crude. Do we get an ATR below here? So the most recent setup here. Again, this is all in the spreadsheet, so all you gotta do is glance at it to see what the ATR was. 8539, is that right? Yeah. So if this gets down to 39, then this long idea is done. And it almost got to right here. Let's see. Didn't quite, well, maybe it did. That's why you got to spread this out. One tick away. That actually may be ATR. Let's see if this contracted. No, it's 29 now. All right. So officially didn't get an ATR below there, but it came within basically one or two ticks. So, technically, this is where you can be a little subjective as well, where you say, yeah, it came close. I'm done with that. Now I'm looking to short because this was ATR retest. I mean, one tick is, if you want to be exact, then be exact. But I just know you got to give it a little leeway sometimes, especially if it's in the favor of your trade. Like, I mean, granted, I don't want to really be short crude like we talked about. I will, but I'm saying as far as being aggressive, right? All this is a pullback to this zone. I'm expecting that, and this is where this directional conviction started too today. So I'm definitely not bearish right now. So I guess what I will do here, I will be, because it's also changed too. So let's see the official price now for this to get down to. It's 85.36. All right, so so that long idea is still in effect. Let's put that back in. For me to short this, can I short this right now? No, remember I was looking, because we're above the yellow lug, I was looking for ATR retest failure. That's not an ATR retest failure because it didn't get an ATR. If we get down to 36 and do this and this and this, then I'll give the short a try. Again, I don't love it, but it doesn't matter what I love. If this market is truly bullish like I think it is, this should not be able to push an ATR below that zone. If it does, then that's canceled. Then I'll short it. Real-time volume rules. Don't care what indicator you have on your chart. It doesn't matter if the real-time volume, the real orders coming in, disputes that. All right, so we're waiting on that. Good torture treatment here. Take my 3750 and go ahead some balls. Oh, that's gone. I'm not kidding. If I was on this webinar right now, I'd be out the door. Like, it's just not worth your mental anguish watching this thing with the relative volume that low, right? Oh, so back to my rant real quick before I hop off here. Let's go back to this. You want to be very careful when this stuff starts. 9 o'clock, Fed Harker. Okay, this is probably what this market's waiting for. So you get 1, 2, 3, 4, and throw in an ECB dude in there. Like I say, I complain in my room every day. I never remember anything like this going on. It's like, what is the point of the Fed minutes and then, the beige book, so on and so forth, if they're talking every day? Like, it doesn't matter. So what I was getting at is, we've talked about 5 million times that algos are 80 to 90% of the market, of the trade, right? All these algos are doing is they're going off keywords that come out of these clowns' mouths. Sorry, but they are. A lot of these guys are clowns, like the one that was defending his trading the other day that he wasn't trading. So if they say something that they have their keywords, if he says something that's bullish, the market does that, right? And then it says something, a keyword that's bearish, it does that. That's why you have to be, first of all, you have to know this. This is financial juice. You have to know this is happening. So you're not getting, I can just imagine the percentage of traders on here right now that had no idea that this stuff's going on while they're putting trades on. This is really important, right? You got to know. And if you see these guys talking, you're probably better off just letting them talk and then waiting. Right? It's just too random, is what I'm saying. So be aware of that. 9 o'clock. This is Pacific, so it's 11 o'clock Central. or 12:30 Central, 12:45 Central, 1 o'clock Central. I mean, just ridiculous. I just don't understand what's changed in them that they talk every day. I really don't. So anyway, they actually, this thing's driving me nuts. Up until February of this year, they can actually trade for themselves. So guys that influence policy, make decisions on policy, could trade for themselves. I mean, they finally changed the law. It's like, I don't even want to start on that rant. So supposedly they can't trade anymore. The ATR guys, this is working out well for you. It's not working out well for my position, but I fully expected this, right? When the volume gets like this, guys, and how many guys got short and then put their stop in at break even and just got stopped out, right? Hey, it may save you this time, but overall, you're going to be beside yourself when the market drops 50 points and you got out of your trade at break even. The other thing I didn't start up today, we'll just throw this on real quick just so we can get a little more torture involved. My tick strike, I was wondering why it's so quiet. I was actually enjoying it. So there's nothing worse than watching position go against you and then listening to it at the same time. It's really fun. But this is really important stuff. That's why I have it, as you'll see here. So in my trade room, you can actually see these. These are set to 1. You see they're not, for all of these, I don't have the sound on, but you can see them. On this one, they're set to 11, so you can make these from 1 to 15 as far as intensity. All this is an algo that says the speed of the orders coming in with the size. So I have mine set at 11, so I'm not hearing it nonstop. It still gets extremely annoying, but it's obviously they're not really buying these stocks, and that's important, right? If you come to import, you can use this in your judgment. If you're coming to an important area and you don't hear any real buying of the stocks that weight the indices that the futures are based off of, you can say, okay, I'm fading that zone. There's no real buying, right? So on and so forth. There's a lot of strategies to this too. This is tick strike. Guys, like I tell you every week, guys and girls, all this stuff's on my website, scottpulcinitrader.com. Click on the banners. You get discounts to everything except like Rhythmic and Spot Gamma, I think. Spot Gamma might be. All right, let's see. Now we're official ATR below here. So I'm going to finish this up and hop off because I know there's another guy starting, the non-guy. This is canceled, right? Because we got the ATR below there. And so much for the correlate. I've been reading stuff lately like, oh, crude's completely correlated to ES now. Yeah, how's that working out? Does this look like it's correlated to you? Doesn't look like it's correlated to me. Down, straight up. So anyway, now what I'll do, reluctantly, is if this comes here, here, I'll short it. This is disqualified as a long. I will, if the new setup comes in, I'll consider a long, but right now this setup is telling me short. If this market was truly bullish, it should have never been able to get an ATR below there. All right, Bruce, if there's not any other questions, again, didn't do much, just put on this torture treatment that I'll probably be sitting in for. I gotta actually be careful going into the 9 o'clock, the Fed guy talking, I'll probably cover it, but I gave it a shot. Algo City. Any questions before I hop off?
Yeah, no, I think we're good. Yeah, thanks, Scott, and we will. Yeah, if guys, if you like this, please subscribe to the channel or give us a like there, so we can continue on giving this free education. Thanks, Scott, and we'll meet up with you next Thursday then.
Awesome. Thanks, guys. Hope, again, not a lot of trading, but it is what it is. And hopefully you learned a little bit about the other stuff. So, all right, I'll see you guys next Thursday. Thanks, Bruce.
All right. Thanks, Scott. Bye-bye.